Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks retreated on Monday from a powerful rally fueled by rate cut hopes, with all eyes on Nvidia earnings on Wednesday. And besides a couple of the mega caps, stuff like Tesla, some of the names here in comp services, Netflix was up, Meta was basically flat, Google was up 1.18%, everything else was kind of red. Nvidia caught a bid because of its earnings, but that didn't translate to the rest of semis. AMD was down, Qualcomm was down, AVGO was flat. Microsoft, Apple, and Amazon all took it on the chin. These stocks were down today, but nothing major, down 0.26%, down half a percentage point, nothing crazy. We did see a lot of selling in the broad market though, especially in staples, healthcare, and utilities. In fact, the quintessential risk-off sectors, defensive sectors, these were the worst performing today. So this does go to somewhat validate the risk-on environment we saw on Friday, especially when we see sensitives and cyclicals outperforming technology, discretionary communications, energy. They were the best performers here today, with the S&P 500 down 0.44%. But all in all, I think we're just seeing a little bit of a breather, and I think ultimately this dip will get bought in what is seasonally a solid week for the S&P 500. This last week of August tends to be a little bit of a blow off top before we go into a seasonally weak September. But we saw red everywhere here today, in small caps, in mid caps, in large caps. There were no real winners today, except in Asia. China was green, Southeast Asia was a little bit green, and then India was slightly green. So just this Asian region was green, everywhere else was red. Europe was red, North America was red, South America was red, Australia was red. Yeah, very, very ugly day for the global market as a whole. But again, coming off what was a really, really good Friday last week on rate cut hope expectations, and it was just a light news day here today. There wasn't much going on in terms of economic data. We got the final building permits. This came in a little bit better than expected at 1.36 million versus the consensus, but that actually fell on a month-over-month basis of 2.2%. But again, the consensus was for it to fall 2.8%. Trump did come out and he said he wants more deals like Intel, where the government takes stakes in these businesses. Essentially, this could be classed as some form of pseudo-nationalization. I'm not a big fan of this. It's a troubling shift in how economic policy is carried out. Personally, essentially confirms like deals-based capitalism rather than rules-based capitalism, and I don't like this move at all. Nonetheless, this is the path we're on. Trump wants to take more deals in companies. I think TSMC, Taiwan Semi, came out and said that if the government is looking to take a stake in their business, they'll give back all of the grants and all of their funding that they receive from the government. But in slightly bigger news, the S&P 500 rebalance took place. S&P Global announced it, and Interactive Brokers will be joining the S&P 500, replacing Walgreens Boot Alliance, ticker symbol WBA. Talon Energy will be joining the S&P 400 mid-cap indices, and Kinetic Holdings to join the small-cap indices. So on the back of this, Interactive Brokers was up 4.7% here in the after hours after being up half a percentage point today. So big stellar rally here for Interactive Brokers. Very, very big move on the back of that. Some other market movers was Dr. Pepper. They were down 11.5% after they announced they will acquire JDE Peet's for $18 billion. And after the acquisition, they will split into two publicly traded companies. Dr. Pepper will spin off its beverage company and its global coffee company as a pure play. The beverage-focused company will include energy drinks C3 and Ghost, alongside juice and soda brands like Mott's and Canada Dry, while the global coffee company will have JDE Peet's and Keurig, among others. This essentially unravels Keurig's 2018 acquisition of Dr. Pepper Snapple, which has been under pressure since then. The volumes and sales have declined substantially. So I'm not sure if this is a good deal for Dr. Pepper. I need to get into the specifics, but if you're looking for some form of pair trade, I guess you could short Dr. Pepper, long JD Peet's, and just play the basis in between those if there is any alpha left to extract. And then looking at PDD Holdings, they reported earnings here, fantastic earnings in my opinion. You can see the market definitely did like the move. They rallied. However, they paired a lot of those gains into the end of the day. Revenue beat expectations, EPS beat expectations by a lot as well. Look at nearly $1.91 was expected. PDD management reported $3.08 a share I do think this will probably give the stock a bit of a bid into its next quarter. And then for everything we saw today, there was 2,000 advances, 4,200 decliners. We saw net inflows in the New York Stock Exchange, outflows in the Nasdaq 100, with the S&P 500 up gaining negative 0.43%. Market momentum continues to remain solid. We still have the 5-day, we still have the 200-day, and everything in between. As long as market momentum remains above the 50% mark, all dips are just buying opportunities in this market right now. Fairly red day for equities, large caps, small caps, mid caps. The equal weighted S&P 500 was down, with growth outperforming value, but really small caps and mid caps taking it on the chin, with large caps outperforming mids and smalls. Futures catching a bit of a beat here in the after hours, especially the RTY, so looking a little bit green, but take it with a grain of salt. European stocks fell, Middle Eastern stocks fell, Chinese stocks gained, Indian stocks fell. So a fairly red day for the global market. Cryptocurrency was probably the worst performer here today, both Bitcoin and Ethereum catching a downside bid. But I think as long as we hold the 100,000 and 4,000 area for these, onward and upward for both these into the end of the year. Volatility was up ever so slightly. The 2-year, 10-year and 30-year yield catching a bit of a breather after the down momentum they saw on Friday. Dollar very strong today, very interesting. And then TLT fell as a result of what we saw in bonds. Then gold and silver was down just because of a stronger dollar. Now, looking at the S&P 500, looking at the weekly chart, very, very solid. You can see higher highs, higher lows, all-time highs. So look, this chart is bullish, right? And in the very long term, if we do get any pullbacks to the 6,200 area, even to the 6,100 area, right? This is ultimately just a signal to go ahead, buy the dip, reaching for these all-time highs. I mean, if we get a move right here, that's still an opportunity to go ahead, buy the dip, because there's very, very strong momentum. However, diving into the daily chart, looking a bit more nuanced, you can see this was the tariff tantrum lows right here. Zooming in again, you can just see higher highs, higher lows. We put in a new all-time high just last week, an equal high here on Friday. And what we are doing is just having a little bit of a pullback, a little bit of a breather. And I think ultimately we're going to put in a low sometime tomorrow on Tuesday. We're going to buy that low. Bulls will step in looking for all-time highs. And then the next move into September will be determined by the PCE inflation data that we get on Friday. So I think the market's going to rally into that print, potentially rally into Nvidia's earnings, and then we'll get the inflation data, Nvidia's earnings, and that will determine the path of where we go in September. Do we trade lower to these levels right here, potentially the 6,100 area, or do we sort of just trade in a range as the market continues to digest all of the incoming economic data and trade policy? All in all, when we look at the weekly chart for the S&P 500, things look very bullish. When you look at the Nasdaq 100, things look very bullish as well. However, not all Nasdaq stocks are made equal. I would personally stay away from Apple. I would personally stay away from Tesla. If you are looking to enter the Nasdaq 100, buy the ETF, or look to names like Nvidia, Meta, Microsoft, or even Google. Google has had a really, really great run, like unabated from these lows. If we go to the daily chart, right, Google has literally done one thing from these April lows, and that's gone up, made new all-time highs. Exceptional strength here from Google. Very much the same from stuff like Nvidia, very much the same from stuff like Meta, right? But we can see a little bit of a breather being taken here from some of these names. When it comes to these small cap names, I do like tickers like Lemonade, LMND. I think we had a big move down right here. And I do think if anything, in the below 55 is exceptional value. I think the stock will be $75 by the end of the year. Another data center name I like is NDIS. I think if you can get anything in the mid 60s, that's a great buy. And then another data center name I do like is Iron, but they're reporting their earnings on Thursday. So do be aware there is a catalyst. Now, this is a very small name. I think it's a market cap of 5.5 billion. So very, very small name. So we can have some very, very volatile moves. But it does look like the market, there's a lot of volume right here. And if we do trade into, like, I would say, below the $18 area, this is probably where you want to accumulate this name here for Iron, purely trading on the technicals. In fact, the financials are really good as well. This company is growing its earnings very, very quickly. And it's in that growth phase, as most AI data center companies are. Look at CoreWeave, for example. CoreWeave is another name I would play if you want sort of a larger cap data center play. I think you could probably sell like $85 cash secured puts. I think that's a great play for CoreWeave. Ultimately, if those puts expire in the money, you can then just roll them to $65, into November, into December. The premiums are very, very good for this name right here for CoreWeave. But ultimately, look, I'm bullish on equities and indices. I think if we do get any major dips, you just go ahead, you buy those dips, looking for higher prices. Now, Bitcoin, it's diverging, as you can see right here. It's broken below the support zone. So ultimately, the next level of support is sort of like this 105 area. And then below that is the 100,000 area. But as long as we hold the 100,000 area, I do think that Bitcoin should continue to outperform, and that dip will be bought looking for 130, 140,000 into the end of the year. Ethereum, as long as we hold the 4,000 region, potentially above this level right here, just above the 4,000 region, that's constructive after making an all-time high. Yes, we did go ahead and make an all-time high for Ethereum. It was a closing high as well. As long as we hold this area or potentially the 4,000 area, I do think Ethereum will eventually go higher. And I do see an end of year target closer to the 6,000 area. So those are the stocks, those are the names that I do like today. If you want to play rate cuts, I think a great place is the XHB, the home builders, right? The home builders ETF. We've had a very strong rally off the lows right here. And I do think we're probably going to go ahead and take out those all-time highs into the end of the year. And then it's price discovery. But home builders look very, very good right now. In my personal opinion, individual names that I do like is D.R. Horton, DHI is a ticker symbol, and Lennar as well. Those are two names that I would look to. But ultimately, when it comes to home builders, instead of trying to bet on a winner, sort of just buy the ETF, right? Because they all trade very closely to each other. So this is what I would look to. If you want something slightly more higher beta, just look at the Russell 2000, just buy the RTY. Very, very strong price momentum right here. And I do think we go ahead and take out these highs at the 2,400 area. There's definitely upside. And, if we do get sustained rate cuts and the economy does improve, we do get better ISM manufacturing numbers, we could potentially see 25, 26, 2,700 in the Russell 2000 into 2026. Ultimately, guys, any dips we do get in September, you just want to go ahead, look for opportunities to buy those dips, aiming for exceptional returns in 2026, especially in equities. And guys, diving into sentiment, this is the Fear and Greed Index, and we continue to remain in the greed zone at 61. And greed sentiment is generally good for markets in the short term because it drives buying, risk-taking, and optimism, pushing prices higher and increasing liquidity. However, too much greed can often lead to euphoria, bubbles, and crashes later on. That's often when we do push into extreme greed and stay here for extended periods of time. As we've just pushed into greed from the neutral zone, do expect this momentum to continue to move us higher, especially into the month of August, where we can actually see a little bit of a price momentum here in the last week of August. This is the last 5 trading days of August, and oftentimes we can see a push potentially to the highs of the month, and for the S&P 500 that would mean all-time highs. But we do have to remain cautious at these highs because the month of September is often a very bearish month, and we could see returns in excess of about 1.5% negative to the downside, guys, often hitting a peak very early on, making higher lows and lower lows in what is a seasonally weak month. However, we do have to pair seasonality with the context of the macro, earnings, market breadth, etc. And I see on Twitter a lot of bears keep pointing to weak seasonality as their base case for a sell-off in September. And while that may be true, few people understand that seasonality is actually a second-tier input. Its context is not necessarily conviction. Breadth and trend always come first. And when they move against the seasonal script, that is often the strongest message you can get. And we have been starting to see that. We've seen market breadth expand. The RTY and the S&P 500 has been outperforming the Nasdaq 100 or the large cap index, with markets approaching all-time highs. That is telling you everything you need to know. So while seasonality may tell us what has happened in the past, it's not a crystal ball, and it just allows us to play probabilities, but we do have to pair it with stuff like breadth, momentum, as well as the macro. And the macro, in my opinion, is looking good, cooling, but looking good nonetheless. If we look at the ISM, if we look at the US manufacturing PMIs, this is the S&P global PMIs, we're at 53. We actually saw an uptick here from the month of July, and we are above the 50 mark. Very interesting. The Redbook Index continues to be the Redbook Index continues to remain elevated over the last couple of weeks. And for most of this year, as you can see, we are above the 4.7% mark, well above the 4% mark. Generally speaking, a Redbook index of about 3 to 4% is very healthy. So to see these levels tells us that the consumer continues to be very, very strong. And the unemployment rate, we've heard a lot about the unemployment rate, but it's still at 4.2%, and it was at 4.2% yet in September. So while many have saying the labor market is deteriorating, the data is not showing us that. And when we also look at ADP employment payrolls, I know we're still seeing some very strong figures there in the underlying. And also when we look at the growth index or GDP and the inflation index, right, we're both in bullish territory. And historically, it's been pretty dumb to be bearish when the data looks like this. However, we do need to keep an eye on the data. And tomorrow we get durable goods orders. So that's going to be the big data print. The consensus estimate there is for about -4%. The trading economics forecast is for -2.5%. The truth will probably be somewhere in the middle. And then when we look at data on Tuesday, the two big names are Okta and MongoDB. We actually have a lot of cybersecurity names. Okta is a cybersecurity name. We also have CrowdStrike here on Wednesday, and then SentinelOne on Thursday. So actually a pretty big week for cybersecurity for the most part, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and you can comment for the algorithm. Cheers.